Welcome, aspiring quant traders. My name is Suresh, a seasoned quantitative trader with extensive experience across global trading firms. Currently, I work as a consulting quant trader with multiple institutional and proprietary commodity trading desks, and also I co-founded the AlfaMax Capital, a quantitative trading firm focused on data-driven and systematic trading and investing. The objective of this educational series is simple yet powerful: to help you understand how institutional-grade quantitative trading systems actually work, not in the theory but through real market structure, data behavior. In this series, we will walk you through AlfaMax QT line structured swing framework, a proprietary quant model that tracks the price behavior, internal data, order flow, and delta participation across the markets. This framework has been designed, tested, and trading live almost over 6 years across global markets. As a part of this educational journey, we will cover a high-level overview of our structured swing methodology and 2 years of structural performance behavior. So in this next 30 minutes, we're going to cover how institutional systems manage the entry, exits, risk using the data confirmation, not by prediction. Please note that these systems are highly confidential and used internally by our trading desks. What we share in this series is strictly for educational purposes only, aimed at helping you develop a professional quant mindset and a deeper understanding of institutional swing trading workflows. If your goal is to move and trade like institutional players, then you are at the right place. Let me take you through AlfaMax structured quant system process. AlfaMax swing structured quant system uses a AlfaMax QT01 line, which is the in-house developed quant reference line that tracks the stock specific data structure, price behavior, and then the delta behavior with respect to chosen stock. And the QT line is green. It means the data during that time frame related to that particular stock is bullish. If the QT line is red, the data during that period is bearish. The QT line tracks the structure of the price behavior as well as the data summary is plotted on the QT line. In order to trade a long only trades on a daily time frame, if the price dips down below the QT line, then the data tracking will start on a lower time frame. In a swing system, it is with respect to every 2 hours. In this case, when the price dips down below the QT line, the data study will start. The system, every 2 hours, it tracks all the data related to stocks and compare it to overall market, and also it tracks the many other structured data parameters. If data parameters sufficient enough to trigger the long trade in a lower time frame, then only the long trade signals will generate. Once the long signals generates, protective stop will be taken from the lower time frame. The time frame, the bar on which the long entry is triggered, from that bar, and using the order flow, protective stop reference line will be taken out. Then on a higher time frame, if the QT line crosses or closes below the reference line, then the protective stop is triggered. The swing structure system trade will be closed. If the protective stop is not triggered and price started moving as per the expected bullish direction, then the exit signal will be tracked by another signal parameter, that's a AlfaMax QT02. AlfaMax QT02 is a exit only data parameters which tracks the structural divergences, data divergences, and weakening in the data participation. Based on all these 3 parameters, the exit will be happening. The objective of the swing trading is to buy near the swing low and sell at higher prices. Buy near the swing low, sell at higher prices for a long only systems. This should be done consistently using the entire data process. So along with this, there is one more data tracking methodology, SE1, SE2, which tracks the data on any chosen time frame. So in these swing structures, the data will be studied basis to 1 day and basis to every 2 hours. Let me explain you the structured swing trading system. In this, the AlfaMax QT01 is a structured internal data behavior tracking tool. So when the QT01 line is green in a daily time frame, it means that the data is bullish during that page of the stock behavior. If the QT0 line is red, then the data is bearish. So all the structures will be tracked on a daily time frame as well as a 2 hours swing structure system. The QT02 is a exit method tracking system. It tracks the structural divergences, delta divergences, and then the weakness in a price. So based on all these conditions, QT0 line will be tracking continuously, and then it will be exiting the trades at a best point. So similarly, there is a QT04, so which tracks the data behavior, all the data parameters, all the structured data parameters related to stock and related to overall market in a chosen time frame. Let me explain how the swing structures works. In order to trade the swings, the aim is to continuously, the swing structure entry should be near to swing low structure entry, and then the exit should be swing high, or until the data becomes weak, the move should be keep riding. How does this work exactly? The recent example, the data until this point, the QT line is a green and price was rising. If any previous swing trade entry was there, it will get exited. After that, when the price dipped down below the QT01 line, the data tracking will be on basis to 2 hours until the sufficient data forms. At this point, there is a sufficient data formation to trigger or change the direction of the price of this particular stock. At that point, the system will trigger a long trade. In this case, the most recent trade in a Mahindra & Mahindra Financial Service is triggered on 12th December. The price is with respect to 2 hours entry 349.90. At this point, it is tracking the data is positive and sufficiently enough to move the price upside. So the protective reference line will be taken from the entry bar. Now in this case, the entry bar low, that's 340. That should be your reference line for a protective stop in a higher time frame. So if the QT0 line 1 is closes below the reference line, then the stop will be triggered. If it is not closing, then trader has nothing to do with this. The system will not exit the trade. Okay. So once this entry is done, there should be only one entry and one exit. Once one entry is done, the next entries will not be considered automatically. Okay. Now the protective stop is in place. The system has triggered the long entry. The only way, automatically QT0 line will start tracking the exit methods. So based on a structural divergence, based on a delta divergence, or until data becomes weak. So this Mahindra & Mahindra is still in a long trade. This move might keep continue. So we don't know how. Let system tells how far the price will move in this current trade. I'll just take you through overview how exactly inside AlfaMax Capital, how we drive the swing structure system training and trading. So if the capital is less than 10 lakh for a swing structure system trading, for all such capital, so the maximum number of stocks allowed simultaneously is 5 stocks. All this stock selection will be based on only liquid Nifty200 stocks only. Any stocks which the system finds during that particular entry time, it shoots for a long entry, then the system picks up that one, and then it will be entered based on a predefined capital and a predefined risk. If we implement it correctly as we trade with the various capital size in the last 5-6 years, but for a demonstration purpose and for any small traders who wanted to learn systematically how consistently this structure system works, we'll try to explain it here. The 10 lakh capital, initial capital will be divided into 5 and each stock will get 2 lakh rupees capital. And the expected average growth, what we expect out of our capital deployment per month is expected average growth will be 8% on a deployed capital. And as per the system process, as per the system signals us, whatever the actual profit comes, that will be noting down as a actual profit. And at the end of each month, what is a actual portfolio. As we expect only the 8% growth, and if there is any extra returns generated, that will be considered as a monthly paper return. When we started with the 10 lakh, January 24, the expected return will be 8%, but end up January 2024, the actual profit will be 22.9%. The extra buffer available during that month is 14.9%, which will be carried over to next month. The similar way, the February month, it has got generated 14.5%, and March month, it has generated 11%. Like this, at up to end of December 2024, from January 2024 to December 2024, it end up in generating 203% overall. So however, at the end of each month, the profit will be added back to the original principal amount. The capital will get increased, the portfolio value will get increased. So there is a compounding goes on every month. Therefore, at end of December 2024, using the 10 lakh capital, the actual portfolio value has grown up to 65 lakh 27,605 rupees. This way, the actual systems will be traded in a 2025, and we are planning to trade the same way 2026 onwards live. In a first time in Indian history, the quantitative traders, we are going to present every 3 months the live PNL results, live trades, and make sure that this is not for any tips or any other purposes. It's only for how consistently system-based trading will be done to educate people in a practical ways. During this trading phase, at any given month, the expected drawdown in a capital is 5 to 6%. On any given month, it might happen. Same thing if we implement or if we traded in next 5 years, how the capital will grow. That will be like, at end of each year. So if the capital is, annual ROI is 203%, and after the max inflation, practical inflation rate, your actual ROI will be just 190.6%. After end of each year, what we do, we will be withdrawing half of the profit as a cash flow to pay the taxes. Whatever profit we have withdrawn, half of the profit, in that we need to pay the taxes, and we need to have a cash flow, and we need to have a lifestyle expenses for next 1 year. What we have done at end of 2024, out of 65 lakh portfolio value, the 35 lakh has been withdrawn, and remaining 20 lakh plus original 10 lakh rupees capital for next year 2025 starting, the 30 lakh was used. This way, if we implement every year, the capital growth will be amazing, and this requires a lot of discipline approach, advanced data structures, advanced system structures, and right time execution, right time trade management. All these things are a part of an entire trade life cycle. When we do it, and this is how the results will be coming through the system trading. And same way, when we started with the 30 lakh, these trades has been taken, and this is how the results will be grown every end of each year. Now I'll take you through the pure trades. So at first, starting up January 2024. So what are the trades which we have taken, and how the trade has performed, how much it has created a ROI. In the January 2024, these are the trades which were picked up by the systems. The TD Power System, Motilal Oswal, Patanjali, Policy Bazaar, Oberoi Realty, ACC, BHCL, NTPC. So out of 2 lakh, TD Power System, the trade created on 28th December 2023 at this price level. And these are the risk-defined quantity, and the trade got exited on 1st 2024. At end of this trade closure, the system has generated 9.23% on a deployed capital. Starting of the trade only, system will define what is actual risk, what is the system risk, and how much if the trade hits the protective stop, how much it's going to lose, and if it succeed, what is the expected return, and at end of the trade closure, what is the actual result. This way, the system will track all the swing trades, and it takes up, and as per a system process, we need to exit. Let me explain you one trade example at a start of the 2024. Every month I'll take up any one trade, and I'll try to give explanation how trades has been picked up, and when exactly it is picked up, and how it got exited. So TD Power System. So TD Power System also at end of December 2023, price was moving up, and then the QT01 line was moving up, and the data was bullish. Then it dipped down. Data study will start on a every 2 hour basis. During this page, the data becomes bullish, and we end up in generating a long trade during this page. And this trade got exited on 12th January based on a predefined system exit conditions. So this way, the approximately almost It's not about entering exactly at a swing low or swing high. So it's about where exactly system click a trade formation will be done. The trade will be end up picking up that during that time. At end of December 2023, price was moving up and QT0 line was moving up. So after that, 26th December, the price dipped down below the QT01 line, and then data study will be starting on a lower time frame every 2-hour basis. And during this phase, data become bullish, and then the swing trade has been picked up on this date in around 29th December 2023, and this trade got exited when the data becomes weak based on a structural divergence on 1st of February 2024, and in this trade the system end up in generating nearly 48% in almost 35 days. So these are the best ever trades which we can able to capture, but not always this kind of returns will come. There are trades which will just end up in generating even 1 or 2%, but for us as a structured system during this page, 1st of January 2024, out of 200 stocks, so whichever the best system structure the trade stock will give, so we will end up in picking up that. So not all the trades will perform in the same way during 2024 January. So it's again the skill set how we select what kind of, but always the stock selection will be within the Nifty200 only liquid, the good market capital stocks. So similar way, these are all the monthly trades which has been taken as per the system process. There's nothing wrong, like we are not trying to predict how the stocks moves, how this thing moves, nothing like that. Out of 10 lakh rupees, we end up in generating 2.3% annual ROI due to the compounding at every month, because the profit will be added back and then it will be utilized for the next trades along with the original capital. Actual portfolio has grown up 55 lakh rupees, and the total portfolio will be the profit plus the original capital. It is end up in having a 65 lakh. This is amazing result, but this requires a very high level advanced skill set, advanced this kind of structured systems, risk management, right execution, so without deviating from any other external noises, and if there is any in between stop losses or protective things triggers, yes, we will end up in taking losses. But compared to the risk versus reward, the risk will be the minimal, reward will be 1:10, 1:20. So in a swing structures, this is a kind of institutional risk reward will be managed. It's not about always a win ratio. It's about risk to reward. How big our system will make when it wins, how small it loses. So in institutional swing trading or quant trading systems, the risk to reward will be very, very high, very, very favorable. Therefore, using only those kind of advanced structured systems, we can able to create a consistent good ROI every month.